Fibonacci is going to tell us exactly the levels we need to get in at during a trend. So you can see a very clear trend. When exactly should you get in? Should you FOMO in at these highs, or should you wait for a pullback? When exactly do you actually pull the trigger and enter into a trade? Well, Fibonacci is going to give you those 3 key levels that you can actually watch for and the price may revert to, and that's where you put your entries. And if you do that, you just get a much better entry during a trend, and it's going to tell you exactly where to enter, and then you can see the trend ride out and potentially move higher. And you can even use Fibonacci to actually get exit levels as well. Hey guys, this is a Fibonacci course. We're going to go through the very basics of Fibonacci and what it is, and then how traders actually use it and some trading strategies towards the end as well. This is an entire course for Fibonacci, so check the timestamps in the description. We're going to go through putting Fib on charts as well, how to read them, how to actually go ahead and place this, and some of the key levels. You can see all of the different parts of the course here. So we're going to go through what is Fibonacci and what are those levels, why do traders use this, how to actually plot the Fibonacci on a chart live, and then a trading strategy with Fibonacci as well. Plotting it on the chart like this is great, but how do we actually go ahead and trade in the real world? And then how do we use Fibonacci or other parts of technical analysis as well to enter and exit trades, because that's essentially what we're trying to do. There are some other resources that you might need along with the timestamps. Everything is in the description. If you want to join the public Discord server, I'll leave that linked in the description. I have some other free videos on YouTube that go through day trading in general. I'll leave them in the description. I'll also leave some deposit bonuses to Bybit and Binance. If you want to go ahead and trade, they'll give deposit bonuses when you sign up. And the Crypto Investor course is a full trading course. As you can see here, we have a trading section that goes through step by step how to enter trades, how to read the market and everything like that. So I'll leave that linked in the description as well. We have private Discord groups that I'm in, and just a ton of information, and videos are added over time for that. So check that out if you want. So what exactly is Fibonacci, and what are these numbers you've been seeing, and these regression numbers as you can see here? What do they actually mean? Well, Fibonacci at its core, very quickly, is just a number progression series. So it was seen in nature that this progression series actually happens very often. It's kind of a natural progression. Now, that can be a bit airy-fairy, and people may not believe that, but there are patterns in nature that follow this type of number progression. So these are the Fibonacci sequence numbers, and what it essentially does is it takes the 2 numbers and then just multiplies them for the next in the series. So if you have 1 plus 1, that equals 2. You take the last number here and you add it against the sum, and then you have 1 and 2, and that equals 3. So obviously you take 2 and 3 together, plus them, and that equals 5. 3 and 5 is 8. 5 and 8 is 13, and so on like this. These are Fibonacci sequences and Fibonacci retracement, or progression series numbers, whatever you want to call that. And that's how they come out on this chart. So when you're looking at Fibonacci, you're looking at a series of progressions and retracements from a top and a lower and a top number. So that is how they are placed on the chart. Now, you don't have to work this out yourself. You can just very simply use a Fibonacci tool on Binance or other platforms. And this is how they're plotted. You take a lower and an upper bound in a trend. That's all that you want to do. Everything else is done for you. So what you do is you have to find the lower part of a trend. And this is always done where you can see the absolute lowest part of the start of the trend that you want to look at. And you actually use candlesticks, and you use the wick as well. So not the body, but the wick. So we're looking at the absolute lowest level that the price went to, and that's where you plot the first point. That's called 1 on Binance. It may also be called 100% as well, if it depends on the platform. Then you just plot the upper bound. That is at the very high point of the trend that you've seen. And for us, that's right here. So we have a low point and we have a high point. That is how you plot. So when you're looking at an uptrend, what you want to do is get the low point of some sort of sell-off, and then you're looking at a kind of short, sharp recovery there before we get a kind of trend lower. The top point, that's what we want, the low point and the top point, and then the Fibonacci retracement is going to be worked out automatically for us. We'll go through exactly how to identify this on charts later on in the video. These are the common levels to use when using Fib retracements though. These will be completely automatic on your system. You can just do the low point and the high point, and this is how it works. What you can see here, really important, 1, otherwise known as 100, it might be 100 on your system, and we have 0, which is the top. 1 is the bottom, 0 is the top. We're looking at an uptrend here. Then you can see all of these levels in the middle right here. Now this is typical Fibonacci retracements, and you can pause the video here and see, but essentially they'll either be given to you as a decimal or as a percentage. What you can see here, the first regression is 23.6%, 0.236 on Binance. The next regression down is 38.2%, then 50% regression, 61.8%, and 78.6%. So you can see that right here. So that's how they are plotted from the bottom to the top, and then it just plots those retracements for you. They're called Fibonacci retracements. These are the common levels. So what most traders will use is these in the middle right here. They're in green. They're different colors green, as you can see here, but that's really what most traders will use to enter into trades. They're the common levels, and I'll go over why they're common levels and some important ways to trade them throughout this video. We now have to look at something called the golden pocket though, and this is like folklore with Fibonacci. It's a level of the Fibonacci retracements where traders love to see the price go. Now this area, this retracement level, typically sees extremely strong bounces if the trend is to continue. That's what you're trying to find out with Fibonacci is, let's say we're in an uptrend. Now we want to find out where's it going to retrace to. If it's gone up and then is going to retrace back to the trend, that's when you want to get in. That Fibonacci golden pocket, it's called the golden pocket, it's between 61.8 and 65. So that is not a Fibonacci retracement level. As you can see here, you have 61.8, and then the next one is 0.786, which is 78.6%. The golden pocket is not a specific retracement line, but it's an area, and most traders trade in areas because trading to specific lines is completely impossible. So what you can see here is this is the golden pocket. So if you look down here, we have the start of the trend. So that's where you plot your first line. And then this is an uptrend that we're plotting. This is Bitcoin. And then this is the very, very high. So you plot there. Now what you're looking for, and this is over a very long-term period, which you can use Fibs for, we're looking for a retracement, right? Because we've had this huge move up, and traders are always looking for a retracement back to a mean or back to these Fib retracement levels before getting in, potentially seeing another move up. So that's what Fib is for, is trading a reversion to the mean in a trend. And so this golden pocket is between 61.8 and 65%. And you can see right here that Bitcoin actually hit it perfectly. And it did start to bounce after this. Now, this is self-fulfilling because there's so many people that trade on Fibs and they're watching these levels and they're like, hey, it's in the golden pocket. Let's go long. And so you can read that how you want. And obviously it doesn't always trade here, but traders will look out for this. So if you're using Fibs, this is definitely good to know. Here is another example of that. Golden pocket, right? So 61.8 to 65, you have an uptrend here. And so you start the Fib down at this level. This is the low, as you can see, the low on the trend. And then you want to plot the high point at the high of the trend, and actually hits it a few times, right? So we have a low point, that's where you plot the low, and a high point, that's where you plot the high, and let the Fib levels work it out for you automatically. And you can see this area here is the golden pocket. Now, this is an uptrend that we're charting. So you have the low, you have the high, and then traders are going to be looking, hey, is the price going to come down and reach the golden pocket? If it reaches the golden pocket, we're going to go long because that's a typical area of, high support. And it did. So if you went long here, you would have ridden it up to another Fib level. So we'll get on to placing orders in and out in a second, but the golden pocket is something you might want to be aware of. Here's how to place the Fibonacci on your trading system. Now I'm using Binance for this. I'll leave a link to Binance in the description. They give deposit bonuses if you're a new customer, so I'll leave that in the description if you want. But what we want to do is come over and click Fib Retracement. Doesn't matter what you're using, it should be similar to this. Go on the right hand side, we'll click Fib Retracement. Now what we're doing with Fib is trying to find out the low point and the high point in a trend. Then we have to also understand that this is an uptrend here. So, we're in an uptrend, but we're looking for pullbacks to the trend. All you have to do is click the low point and the high point, and it will do the rest for you. So I'm going to go low point here, and you can see that. So that is the start of a trend where the price moved way up to this level. Now that's a great price move, really is. And so obviously we didn't trade that, unfortunately, but what we're looking to do now is see where the reversion comes so we can get into that level to potentially follow the trend upwards more. if you think the trend will continue. So all you do is that you take the low point and the high point, and it's now on the chart. Now you can go to settings here if you want and change all the colors. You can put background in, and that colors in all of the chart or not, it's up to you. But we're going to go okay now. So now we have the low point, as you can see, 1, we have 0 up here, and you can see all of my Fibonacci retracement levels. Now, what I'm going to do, and I'll get to the trading section in a second, but that's how you place it on. And then obviously you're looking for the chart to revert down back to these retracement levels where you would want to place a trade at. So if we just, follow the chart on a little bit, you're looking at levels around the, 0.5, 0.618 to enter a long trade if you think the trend is going to continue. That is why you use Fibonacci, to look for the retracement back to that level, Fibonacci level, to then go long again. You can see the price moves up after that in this uptrend. We would have done much better to wait for the pullback to the fib level rather than FOMOing in at this high. Much better. It would have been a much better trade for us. Before we get into the trading strategy, here are some key tips that you might want to follow. The first one is identify the trend first. Not just the short-term trend, but the longer-term trend that you're in. So what we can do here is go over to the chart and actually zoom out. I was using the 4-hour here. Go and use the day chart as well and just see where the wider trend is. And you can see that definitely throughout this period, it was an uptrend that we could have traded, right? So come out and see what the chart is. You can also go to potential indicators and use something like moving averages. And then you can put them on the chart to see them. So if you see a potential moving average, we're going to go over and put, let's call a 50 period moving average here. And then we'll change the style. Now, what you can do when you use moving averages is see where the longer term trend is and if it's suitable for you. So we can definitely see here that the price is moving through this 50 period moving average, potentially a kind of bullish divergence, a start of an uptrend, and it would have been a great uptrend to trade. This would have been a really good move. So what you can see here is you need other things to tell you where the trend is. Look for what is the market telling you, what type of environment that you're in. That is going to identify the trend first, and that's how you then use Fibonacci more specifically to enter levels. We want a swing low and a swing high. That's what you need to get the Fibonacci on the chart. So you can see that here is where I placed it. Essentially, we want a swing low and a swing high of a trend. A trend is when you get the trend up in the candles and then a little trend down. So that would be the beginning of it and the end of it, right? So that when you start seeing the trend down, that is where you say, okay, we'll put the fibs on and we'll see where we can get a retracement to. So from the low to the high, and then that retracement here, that is where you want to look at, and that's when you want to try and get in. How strong is the trend? Because this will affect what fib level that you use. Do you want to use the 0.382? Do you want to use the 0.681 or 61.8%? Which one of those do you want to use? In a very strong trend, you're not going to get a retracement back down to the 61.8 level. It might only go to the 38.2 level. And so you have to change your strategy dependent on how strong you think the trend is. Strong trend, it will only pull back a little bit. Weak trend, as you can see here, it might pull back a lot. And so if it's a weak trend, then you can say, I'm going to lay off a little bit and see where the price goes. So that has to be something that you learn over time as well. The 4 stages of a trade with Fibonacci then is number 1, identifying the trend first, the mega trend, the market trend, the longer term trend that you're on. So if you're trading on the 1 hour, you can see me trading on the 1 hour here, go to the 4 hour, go to the 1 day and see where the trend of trade is. Now, if you're day trading, the longer term trading is potentially not going to matter too much because it may be a weak trend, something happening in the market, a bit of news. And so take it for what it is. You can see the overall trend, but definitely if you're day trading, then obviously specific news and events are going to be way more important. So you have to weigh everything up in that point. Number 1 though is just to identify the trend. Now what you can see here in this is that we're definitely in an uptrend, right? For the 1 hour, we're getting a pullback here. And we're getting actually on this chart what you can see as a double bottom. Now this is more technical analysis that isn't Fibonacci, something that you would see as a trader. If you want to learn more about that, investor course in the description. But a trader is going to see this and say, okay, potentially a double bottom here. Let's see where we can get in. So the first one is, where is the trend? If it's in a general uptrend, then you want to go long. If you're in a general downtrend, then guess what? You don't want to go long. You want to trade short in the futures. So that's number 1. Second one, swing low and swing high. Just get them on there. So in an uptrend, what we want, and you can see that right here that I placed on the chart, is we have the low, which is this very clear level here, because we've got a double bottom, so that's the low. And then we saw this huge move up, right, from 30,000 to 38,000. So it's a massive move. Now you don't want to be trading this because it's such a big move. You're like, well, I'm not gonna, pay these crazy people have moved the price so much. But what I am going to do is wait for the reversion. And that's what I'm going to use Fib for. So what we're going to do here, right here, we can just see that the price is moving down again. So what we're going to want to do is place the low and the high, and then let the fibs tell us. Where would I place a trade? So that's what we want now, right? So you've put that on and you said, right, where are we going to place the trade now? Where can the price get to? Now we want to get the preferred fib levels. Do you want the 50? Do you want the 61.8? Or do you want the golden pocket? Is that what you want? Where do you want to trade? If you think the trend is very strong, then you're going to want to trade up at the higher levels like 38.2. Or if you think the trade actually might come off a lot, you might want to place some bids in right here, expecting a bounce from that golden pocket area. That's up to you in terms of what the market is telling you at the time. If we just let this play out, what you can see is that the Fibonacci, the price really traded around that Fibonacci level, the 61.8. So again, that golden pocket, right? So we had the low and the high. Now we're thinking we're going to plot the fib here, and I'm going to be looking around the 50% level to potentially get in because I think we're still in an uptrend. So instead of buying in at this price or the 23.6 or either the 38.2, saying I'm going to place a bid here, a limit order around the 0.5, and it tells you on the right hand side exactly the price, right? 33,909. So that's where you can put some bids in. Or what you can do is actually say, you know what, I'm going to wait until the 61.8. That's my golden pocket, and I'm only going to do that. It's up to you which your preferred fib levels are and how long you want to be in the trade for. But the price came down to this level and the 61.8 came down to 61.8, a little bit lower as well, and then bounced off and carried on in the uptrend. So if we do see the uptrend, it was a really good uptrend after that. And we'll get into exit strategy as well. But as you can see, the fib levels just give you a much better area to get in rather than saying it's come off and I'm going to get in up here. And then you've seen it go lower, right? So the fib levels just give you a little bit more confidence. So, you know what, I'm actually going to come in around this level, around this, the fib level, around the golden pocket, maybe a little bit higher, right? And so that's going to give you a much better level to get in. So that's what people use fib for. The next thing we want to do when trading is identifying the take profit and stop loss. Most people will identify a fib level. So in this instance, we're going to go 61.8%. We're going to trade that golden pocket. And then what we want to do is obviously place a stop loss below this. So if you're day trading, if you don't know about stop loss and take profit, videos in the description as well, and the crypto investor course goes through that step by step. But if you place a trade around the 61.8 fib level, which a lot of people do, you have to prepare for it to go lower. You can see that we're in a sell-off here, but you can be prepared to go lower, and then you want to place your stop loss usually just below this level because it can always move lower, right? So you want an area of safety for your stop loss if you're day trading. If you're swing trading, you may just want to place kind of a heavy stop loss down at the next fib level and say, you know what, if it goes down there, that's fine. You can put that in as you want. So if you're getting in at this fib level, you're looking at an area a few percent below, however you want to play that, whether it's this next fib level or midway in between to give you some space. And you would have got tested here for sure. So that's why you always have to put a stop loss a little bit below. And then that's it. Now for take profit, we're going to get into that in this section. So when do we actually take profits here? There's a few ways you can do this. I'm going to show you a couple of them here. This is a Fibonacci video. So we're going to look at the Fibonacci extension tool and how that would work. I personally like to use support and resistance levels. I feel more comfortable with that. Just for having traded so long, I feel like those resistance levels are better for me to use, but everyone uses different technical analysis. But obviously we've identified the stop loss here, which is a level beneath the fib level that you want to use just to give the trade some breathing room. Now what we want to see is a potential take profit level. So you can look out at the chart, and I'm going to go over to the fib, not fib retracement, but we're going to go to trend-based fib extensions. We're going to look at that. Now what you want to do is place the exact same figures on this. So rather than the retracement looking for the pullback, the fib extension essentially takes the trend and then extrapolates that again to the upside to get a potential level where it may go. So what we're going to do again is trade the exact same thing that we did on the downside. So this downside here, and then this up level here, absolutely ideal. And then we're just going to move it across at exactly the same price level, right? So we have the low, we have the high, and then it's going to make you click again, and you want to get that exactly on where the high was. And that is potentially the extension levels. Now, I don't personally use extension levels. Some people do. What's the extension level? Well, we've got the entry, we've got the low of the trend. Then we had the high of the trend up here, right? And then fib retracement levels are giving you a level to actually get in at where the trade retraces to the trend. Well, the extension levels are saying if that was the trend, if that was it, how, potentially we're using Fibonacci again to get levels where the price might go. Now, it just so happens that this worked out with this trend because this was just an amazing uptrend, right? So anything would have worked in this instance because you would have got in around this level. As long as you didn't get stopped out, you could have placed, a take profit around these levels as well. So, what most people use, which is the 50%, 38.2, maybe even 61.8%. It's up to you. Any of these levels obviously would have worked at that time. You would have gone through some ups and downs, but eventually if you put your take profit around this level, 44, 45, you would have had an amazing trade then and traded a great uptrend. What I prefer to do, because I think these are a little bit outlandish, when you're day trading, this is an extremely long trade. Right. And so I don't expect people to be using fibs for take profits as well, because you're just looking at it and thinking, that's a perfect trade. But this is a long time that, the trade's going to be on for, and that may not be what you're looking for. So if you're looking to get in around the fib levels, what I would usually do is just look for other areas of what I call support and resistance. So what you're looking for is if you're going back, are there areas on the chart where you can see that the price may go to again? And that would be one here. As you can see, this would be a support and resistance level. Why is it support and resistance? You can see that the chart trades here once and gets rejected, twice and gets rejected, and then moves back down, right? So we're in a different area now. Then we have this level as well, which we're actually plotting with the fib. Again, it's a resistance level where the trade gets sold off on. Now, if you're trading long and thinking, I think we're going to have another go at this, you're looking around this level as well to probably take profits, which would be the resistance level, because you saw it got sold off once, twice, and 3 times. And you're saying, okay, that's fine. We'll see if we can test it again. And a lot of traders will actually take profits here. And you can actually see that's what they did, because essentially what happened is the price moved up and then people had their take profits here. And so that's why the trade actually moved around this level for so long, is because so many people were saying, I'm going to take some profits here, I'm going to sell. And that's why you got the consolidation. And you know what? Buyers even came in and pushed it even higher. So that resistance level turned into support here. And then it moved even higher. Now, as you can see, what most traders did when they traded this move is trade this fib level or around that. Also it just happens to coincide with the moving average, which is, confluence of technical analysis. So people were buying here and then they were just selling at this resistance. So a lot of people do that. And so because a lot of people do that, you do get a kind of consolidation here, which, most people would say is their take profit. So that's what they rode it. That's why I use support and resistance a little bit more, because that's where trade usually happens. Let's do the exact same thing for a downtrend. So complete opposite. If you want to trade in the futures market, you want to go short, or you're looking at a downtrend and you're saying, where can it revert to? What's going to happen? So we do the exact same thing. We identify the trend first. Now, more recent past, we're seeing a downtrend with Bitcoin. So I'm going to do it for Bitcoin here. So we know we're in a downtrend. The economy is telling us we're going to be in a downtrend. So, asset prices are coming off. So obviously we see that first. We can also see here the downtrend. We can see the 50 period moving average, I think it is, just pointing down, right? We're in a downtrend. If you see the 200 period, 50 is below it. This is a downtrend. Now we look at swing highs and swing lows, a little bit different on the downtrend. Now you're looking for reversions to the mean, which are to the upside. So all that you do here is just make sure that you plot this correctly in that the 1 is up at the top and the 0 is down at the bottom. and that shows that downtrend. So the reversions will be to the upside instead of the downside. So that's it, you just reverse it. And then you're looking at your preferred fib levels again, whatever you want to trade, and identify the take profit and stop loss again for that trade. So what we can see here on this potential trade is that we get a huge sell-off. So I want to see the top of this trend right here to the bottom of this trend. And now what I'm looking at is, what are some levels that I could potentially short at if you are going to trade short and you want to, see that trend continue. Now, like I said, very heavy trends will not reach these upper bounds. If it's a very heavy downtrend, you're going to see a move down, and then the price will barely get up before this kind of first green layer. So you can see this, and you can watch this over time, and you can see that if we just extend this out so we can see the lines, we're seeing a few weeks of trade where the price barely gets up to this level and then is constantly sold off. Now this is so bearish, right? You're seeing a downtrend and then you're seeing no recovery whatsoever. This is where fib comes in really great, is that you can just see, is there a bounce? Is there something that's telling me that the trade is going to reverse? Is it potentially going to an uptrend? You can see the fib is telling you right here, this is incredibly weak price action. So if there's nothing more, it just gives you context into the price action. And what you can actually see is we do get a little bounce to this fib retracement, and then we get sold off again. This just happens to be a key area of resistance for the chart. You can see support down here, resistance here, support here, resistance at the top. Just happens to be at this first fib level that anyone would ever trade. And then you can see it goes on again. So if we extend it further, we can see that the price is just so weak. There's no recovery whatsoever. And so in your mind, you're thinking, the fib's telling me that this price action is super bearish. So you can go short if you want, and then just put those steps in place, which is seeing the reversion to this, shorting that resistance level down, and the price goes way down after that. And so obviously you would have been good to trade short there. Another trade that shows us with the fib, just levels. So even if you're not trading short, it at least gives you some information about where the price is and how strong it is with how much it bounces back after a big move. Fibonacci is great to use, but it has a load of limitations as well. It's only a guide to potential trading levels. It's not going to be perfect, and there are easy levels you can see after the fact. But when you're trading, the hardest thing is trying to actually put it on the chart in the first place and be confident that the trend is going to continue. So that's difficult, and in the real world, you're not going to get that right all of the time, and so fib isn't perfect. Trends need to be plotted correctly. If you kind of misinterpret the trend and say, yeah, I think this is a pullback, or is it really a pullback? Like, you could have gone here and said, I think this is a trend right here, so we could have gone in. We might have bought some here, and because of what happened in the real world or some other news event, you get the trade wrong. And that happens when you day trade. So understand that fib is just one thing you can use. Day trading is risky, which is why you need take profits and stop losses all the time if you're day trading. If not, just use the fib as it is for some extra information. Market dynamics can render fib irrelevant, right? So Fibonacci cannot predict the future or news events that can move the price significantly. So that's why people use this. And you have to use it with other TA like moving averages, support and resistance. That's going to give you much more color. If you want to know more about that, we have a trading section in the course, right? So many videos here, private Discord groups where you can ask me questions. I'm in all of those, trading, investing, and everything like that. So new videos are added all the time to this course for free for existing users. So I'll leave that link in the description if you're interested. I'm James with Money's EG. Cheers for watching, and I'll see you in the next one.